With political problems remaining unresolved for now for Greece and Italy, Europe continues to make the financial news headlines. Joining me today in the latest Targets in Focus is Brenda Kelly, market analyst at CMC Markets, to discuss how the turbulence is driving the currency markets and to discuss their projections for three of the major currency pairs. Thanks very much for joining me, Brenda. Let's start with the euro-dollar. Reports yesterday allegedly suggesting France and Germany were considering some form of two-speed euro or a change to the eurozone, along with the Italian yield story pushed this pair down to around 135. If the negative headlines continue, how low do you think this pair can go, and where do you see it heading in 1, 3 and 12 months?
Well, we are seeing a lot of buying by the ECB in the Italian and Spanish bond market, and that does seem to be underpinning the euro for the time being, given that it's above the 135 level and heading maybe towards 136 at the moment. In the 1 month, I would expect it to come back down to the support level around the 135.50 and consolidate around those levels for a while before more than likely falling back towards the 134.50 level. Then on the 3 month projection, the 133.50 level seen in October could act as a target before a fall to 132.50, which held the pair earlier in the year. The 12 month projection then, I would expect it to reduce down to 131.45, which we witnessed in September, and this will become important again should the downward momentum continue. And again, if we consider the possibilities for a full-scale QE program or a two-speed economy with a differential between the core and the peripherals, that would ultimately have a very negative effect on the single currency.
On to the pound dollar now. That suffered as well yesterday, falling back to nearly 159. Do you think it could get a short-term boost though this week after the BOE rate decision today? And where do you see this pair heading in the short, mid and long term?
Okay, well, I would see a similar scenario for sterling as I would do for euro, given the eurozone weakness. It's been in a range for the past number of weeks and failed to break through the particular level of around 161.20 against the dollar, and now it's been capped by the 100-day moving average. So despite, obviously, we've had some good encouraging news in respect of the GDP figures in Britain in Q3, however, manufacturing PMI data is still quite disappointing, and I think this will continue to be reflected in cable and further sterling weakness. Also, the emergence of this double top on the daily chart could actually complete, and we could see the 158.50 level hit within the 1 month, and that would open up the likelihood of a 3 month target of around the 156.40. Longer term then, based on continued sterling weakness and the effects of the eurozone, as well as the fact that the dollar seems to be taking some funds in through its safe haven sort of status, we could see the 12 month hit 152.
Finally, let's talk about the dollar-yen. We saw some movement in this pair this week when it hit the lowest point since the BOJ intervention, but it has since rallied. With global turbulence, are you surprised at the continued impact of the intervention, and where do you see this pair heading?
Right, well, the Bank of Japan have continually tried to weaken their currency, and they haven't necessarily been all that successful about it. Even the last intervention had quite an unusual feature with fairly calm trading throughout the afternoon session, and that would be quite sharply in contrast to the volatility that you'd normally see, where you've got 7.5 trillion yen being traded in a short space of time. But again, this is a specific strategy, I think, that was employed by the Ministry of Finance. So at the moment, we have comfort around the 77.70 level, with limited downside, I think, towards the 76.30. It does have room to move towards that, but again, that will be quite limited. I would expect the pair to consolidate around the 77.70 mark for a month or so. And again, the intervention, as I said last week or last month, would have very little intervention effect, and the continued speculation that the Bank of Japan could do more of this and imitate the Swiss National Bank in its endeavours to weaken the currency could serve to keep the currency where it's at. So I think it'll remain a safe haven currency for the next couple of weeks anyway, but there'll be a room, I suppose, as well for investors to move into the dollar as an alternative safe haven. It is the traditional one after all. So in the longer run, the improvement in the US economy could send the pair higher organically without intervention. Maybe with the 3 months we could be looking at around 82, followed by 83 in the 12 months.
Thank you very much for joining me, Brenda. That's all we've got time for. Brenda Kelly from CMC Markets talking especially to Dukascopy TV. Stay tuned for more exclusive insight and analysis. Goodbye.